and I'll introduce our speaker today. This is a relatively short presentation. It's just 30 minutes, and our speaker is Campbell Pride. Campbell is President and CEO of XBRL US. Before he joined XBRL US, he was Executive Director at Morgan Stanley, so Campbell actually has a wealth of knowledge both on the XBRL side, on the accounting side. He's also a CPA and was a formerly a partner at KPMG. But he also has a lot of experience on the investment side as well. So with that, I'm going to turn it over to Campbell, and Campbell is going to share his screen and take us through a demonstration on how you can identify. Campbell?
Thank you, Michelle. Just bear with me 1 second while I just share my screen with you.
And just so everyone knows, we will be sending out a link to the Pension Analyzer in email tomorrow. And the tool is designed to really help companies because we noted that there were a lot of problems in pension footnotes that were formatted in XBRL. And as everyone knows, those errors result not just in errors in your XBRL, but they result in errors in your financial data that's being used by stakeholders, both regulators, shareholders, and other groups. So the purpose of this tool is really to provide you an opportunity to upload your own pension footnote and identify those errors, and it actually gives you information on how to resolve those errors and fix them so that in your next filing, you don't make those errors again. So that's what we're going to walk you through and help you get a good understanding of how that works. And while we're bringing this up, Campbell, I think that from your analysis, you determined that about 32% of all filings have problems in their pension footnotes. Is that correct?
Yeah, so basically as part of this exercise, we've written a number of rules, which we'll go through in a minute, and they analyze a pension footnote, and they look for both things that you would expect to see look at relationships that you would expect to see in a pension footnote, and make sure that those relationships hold. And so the idea behind the rules is not necessarily to find XBRL problems, but just to really find any issues in a filing that can result. So for example, if usually most of the stuff in the pension analyzer is going to be picking up items that exist in a pension footnote that is going to be filed as part of a 10K. There are a number of issues that can also be picked up as part of a queue, and that those will be less prevalent than what you would see in the K.
Well, what you see here is the pension analyzer. So Campbell, you want to take it away?
Yeah. So David, if we just go through here, if you just want to enter your email and password. So what David's going to do here, David, if you want to, if you just click on the zip file and then that'll download that to your local machine. Here you can see what the pension analyzer needs is a zip file to be submitted to it, and this zip file is what the zip file is that you would normally post to the SEC website as part of your submission, which includes your XBRL instance document, the XSD file, and your associated link bases. So David's just downloading this here, and you can see that the download's completed. And then if you just go to the pension analyzer, so you've got two options. You can either add your local copy of the zip file, so this could be one that you've created. So David, if you just want to go to Browse, or the other thing you can do is enter the location of the zip file into the URL where the zip file is. And this is if you wanted to run the pension analyzer on a filing that's already been filed. You can put the URL of the zip file. Or you can add your own zip file if you've got a filing that you haven't filed with the SEC yet. So you can either do either of these. So David's just going to, you can see here he's selecting the zip file from his local hard drive, and then he's just going to click Run Analyzer. And that return is you can either return it as an HTML or an XML format. So we'll just return it as an HTML format. So if you just want to run the analyzer here, David. Now, this is going to take about 20 seconds to run, and what this is doing is it's the file's being uploaded is being loaded into our server, and then what it does is it processes the rules against the filing, then it'll return a result back to you. So, David, if you just want to go to back to the previous tab with the US GAAP Pension Analyzer on it. And you can see we'll just go through some of these rules just while that's running in the background. If you look download the description of the validation rules, if you want to see what the tool's doing, you can look here, and it gives you this is a full listing of all the rules that will be run. And so let's make that a little bit bigger. You can see here, basically it's going through, we basically defined rules around each of the elements that are contained in the XBRL taxonomy to check each of the conditions that are there. And there's approximately about 200 different rules that will run. And what this tool is doing is it's basically, what it allows you to do is run all of these rules simultaneously across your filing. So that's why it takes about 30 seconds to run, because it's running each of those. And depending on how many dimensions you have, that can have an impact just on how long it's going to take. So if we go back to the David, if you want to go back to the US GAAP Pension Analyzer, we should have come back with some results. So there's two types of results you can have. You can have warnings or errors or information. And what each of these rules are doing, this is showing here as this is the results for a subset of the rules that have run. So in this first rule, we check. One of the things we try to check for is, obviously making sure items aren't negative, making sure that calculation relationships hold between filings. So one of the things that allows us to do is to be able to do some quite detailed testing, of the actual filings. So we for example are able to make sure all the relationships between the movements and the pension obligation and the pension assets make sense. So in a lot of cases, or in some cases, we've seen a number of issues actually in the underlying HTML filings where the pension disclosures aren't quite correct as well. So the rules are not only set up as a way to validate the XBRL that you've created, but as a way to also be able to basically have a bit of a sanity check also on the underlying HTML filing. So what we'll do is we'll just go through an example of some of these rules, and that have just been generated here out of the filing. So if we just go to the first one, David, which is a warning. Now, this is one of the things we do check is when we're looking at the pensions, to check the actual pension returns recognized in pension assets. In this case, you can see here is 187,000. We basically do a recalculation of the amount that we would expect to go through AOCI. And so the reason to do this, and we do this as a warning, is 'cause sometimes there can be a bit of difference on it. But what this will typically represent is that there's been a sign error on the way that folks have put in the actuarial gain or loss recognized by the company. Now, there was a bit of confusion around this element in the US GAAP taxonomy. Some people were putting gains in as positive, some people were putting gains in as negatives. We can't check that if the item should be negative or positive, so we've done a calculation here, and if the calculation doesn't work, then you can look at that and say, hey, have I got the gain or the loss around the right way? Secondly, if we go to the next one, we've got something called an invalid line item axes. These are a whole set of rules which are basically looking at if a line item is being used with an inappropriate axes. In this case, you can see they've used the the first thing it says, the defined contribution plan cost recognized. So this is a defined contribution plan, but they've used, in this case, they've used it with the defined benefit plan. So there's a separate axis for the defined benefits, for the defined contributions. So they're totally different types of plans, and one line item shouldn't be being used with the other axes. So we look for that too, and we flag that. So David, if you just want to scroll down a little bit further. On the right-hand side, you'll see as David's scrolling down, just go to the next rule, which is after 14.110. There's like an envelope there that just automatically sends an email. If you have any questions or something doesn't make sense, then you can send just automatically send an email off to us with just explaining what the issue is. And then we can give you a call and we can just walk through it. One of the goals of this is to make it easy for folks to be able to resolve these issues, so that and generally we see quite a bit of variance, just in terms of the filings. Some filings, if you don't have any pension plans, obviously you're not going to have any issues identified as part of this running this tool. So if we go down scroll down to the bottom, David, these ones are pretty straightforward. If we then we do have some reasonableness checks in here. What this item is checking for is, there's a calculation that you'll have, and most people, this should be fine, but this is just kind of a sanity check on this to make sure that the correct elements are being used. And this is checking that the expected return on assets. So this is a calculation that you have in your pension plan disclosure, should be roughly equivalent to the opening value of the plan plus any contributions, less payments in the period multiplied by the expected long-term return on assets. And this is trying to, just test that there's four disclosures you'll make in your pension note, making sure that they make sense. I'm just giving you then it gives you the results of it. Now we have tolerance built in for if you between the differences between the payments being made and the contributions being made during the year as well, to counter for that if there's any differences depending on when the payments were made or when the contributions came into the company. And then if it's outside of those tolerances, we'll flag it as a warning. This is just so companies can look at it and say, hey, is this calculation actually right? Because it looks a little bit out. Now it's a warning, because in some cases it may not match. There may have been something that happened during the year which which pulled it. Like for example, if it was a big acquisition and then that had a huge impact on the pension. So we don't take those into account, because a lot of times those come in as extensions. So if you roll forward to the next one, David. And this is a major issue. This item here, we have this roll forward. 14921 is the rule number you can see here that David has. And one of the things that we put guidance out on, and the Best Practice Committee put guidance out, and the FASB put guidance on, is when you're reporting your pension notes, there'll be numbers reported both in the change in obligation and in the change in plan assets, which appear in both. A typical example of this, as you can see here, is the defined benefit plan. Benefits paid. Now that should, when benefits are paid, that should reduce the obligation and it should reduce the plan assets. The same element should be used in both roll forwards, but in a number of cases some companies don't do that, and they create an extension element for the other side. You should use the same element in both places. So these rules here are just checking that you actually have. So in this case, the company's gone and made an extension for it. So I thought it'd be quite useful just to go through this is just one company, but just give you a summary of what the biggest issues in the pensions we're seeing are. So David, could you just open the Excel spreadsheet, please? Yes, this is an Excel spreadsheet that I had emailed to you earlier. If you can just open that would be great. And what this Excel spreadsheet is, we've gone through and taken a look at all the 2013, all the filings made for the end of 2013, and then just summarized those, so we can get an idea of, what are the biggest issues that filers are running into. And one of the biggest issues really is concerning dimensions, and what we see is that it can be broken down into a number of different categories. As David's bringing up the spreadsheet, we'll just give you a start, just walking you through what those are. Okay, great, thanks, David. If you can just scroll over, we can hear me. Can everyone hear me? Okay.
Campbell, I can hear you.
Okay, thank you. So the first item, this is the most prevalent. You can see here we have some just example messages, and this is this one here. This first item is with 2,938 cases of this, and this is just an example of what that may be. But what's happened here is when you're doing your disclosure of your plan assets, there's a breakdown by the different classes of plan assets that you may have, and if you look on the second to last, the fourth to bottom line, there's a message there. It says defined benefit. That's it, David. Defined benefit plan by plan asset categories axes. Now, what this axes is supposed to do is supposed to define the type of plan asset that you have. It might be a debt security, it might be an equity security, whatever it may be. But you can see here the company's put the United States pension plans member on it. Now, that member should not be used on this axis. This axis is used for, breaking down your pension plan assets by type of plan asset, not by breaking it down by different type of plan. There's another axis that should be used for that. So we check for that. So if the different pension plan type members are used on this axis, we'll flag that as a problem. So if you want to go to the next rule, David. So the next one we can see here in row 3, and I'm sorry if this is a little bit small, but basically what's going on here is we look at the line item, and then we look at the line items and we make sure the line items are being associated with the right axes. So all this is saying is, hey, I've got this value and I'm going to break it down in a certain way. And in this case, they're taking the defined contribution plan cost. So this is what the company's paying out on their defined contribution plans, and then they're breaking it down by their defined benefit plans. So they've broken it down using the defined benefit plan axes. And obviously a defined contribution, the amount you're paying a defined contribution can't be broken down by a defined benefit plan. They're totally unrelated types of plans. So in this case, the companies, they've used this line item with this axis. Now, there was an issue in prior taxonomies where the defined contribution axis was a little unclear how it should be used, and the FASB has fixed that. We made a number of comments on that, and they've tidied that up. So we flagged that. So in those cases there's an axis there that you can use. Just so everyone is also aware, the FASB is working on a pension guidance as well, which will hopefully which is based on a lot of the stuff that we've seen in running the pension analyzer. Okay, the next rule, this is the next most common, is in this case we've got this case termination benefits is being, and it may not be, this rule not only runs on special termination benefits, but it could run on any line item which you'd expect to see in the roll forward of your plan obligation, or the roll forward of your plan obligation being broken down by the defined benefit plan asset category. These benefits and other items are all part of a anything that represents a movement in the obligation shouldn't be being broken down by your plan asset categories. The only values that should be broken down by plan asset categories is going to be the total of your plan assets. So this is just flagging this so that companies that companies can correct it. So in this case. There's something strange going on in this particular example, and they probably need to look at it and really look at the disclosure and see what they're trying to do here. You can also see the defined benefit plan by asset categories axes is equal to the net periodic benefit cost member. So there's a lot of strange stuff going on here, which is just not correct, needs to be fixed. This is just a random. This is not one particular company. This is just a random selection of issues that we've seen. So David, if you want to go to the next one. Yes,
yeah, well, we have a couple of questions. We have a couple
Yes.
of questions from the audience. The first one is, how do you tag defined contribution total employee contributions expensed for the period?
So that if you're reporting the defined contributions for the period, there is an element that you can use for that. In 2014, the FASB also put in a new axes to make that clearer. So one of the problems was the previous axes limited the types of plans you could put on the defined contributions, but that problem now has been resolved.
Okay, we have another question, Campbell. Do we need to resolve all the errors, or is it okay to have errors if the source document does not contain the same errors? And I guess when whoever said this said the source document, they must mean the HTML.
Right. Now, in some cases, we're trying to flag a lot of these cases where we see things that are strange. If it's flagging something and you see it in the HTML, you may want to understand what's going on in the HTML. And then in some cases we're flagging things which really, it could be a combination of issues. It could be that there's something odd that you're aware of in your filing, which, let's say, there is an impact for some one-off event which you've kind of incorporated into a line item in your filing. You may say, okay, I'm happy with that because I understand, for example, let's say my estimated the estimated pension. The estimate of my pension return is not quite within what they expect, but I know I had we had a massive disposition and a lot of the stuff out, so the value's not going to be the same, and that makes sense. But if you have an error, you should at least understand why you have an error, so that you're happy that it's okay. Now, if you know the filing is the same as the HTML, you should probably still look at it, because we'll be flagging something which looks strange. But if it doesn't make sense, please send us an email and we'll get back to you pretty quickly, and then we can explain why this issue is coming out.
Campbell, I think one other thing it's important to point out is the question about resolving all the errors in the XBRL. The XBRL financial statements, they are your financial statements. So if there are errors in the XBRL financials and maybe an error is not in the HTML, it still means that there are errors in financial statements, because in many cases the consumers of the data are using the XBRL and not the HTML. So they're not going back to check the what's being called here as source data. They're using the XBRL as the golden copy, so to say, of of the data.
Right. Thanks, Michelle. But I would encourage everyone, if you're interested, if you have pensions as part of your disclosure, you should try running this pension analyzer as part of your. You should run this as part of your process. It's there, it's available, it's free to use. One thing you do just have to do is just log in. We do that just so we don't have it, like bots come through and try and, we'll just clutter up the server with a whole bunch of stuff. So, you know, and that login doesn't, all you have to do is apply for a login. There's no obligation. You can just do that. You'll get an email verification, and then you can just run the tool as much as you like. You can run it on your own filing before you file. We have a SAS70 associated with this as well, so it's secure. Your filing is going to be fine. Alternatively, you may feel more comfortable just taking a prior filing and running that against it. So I would encourage you to use the tool and then run each of these, you know, run it and see what the results are for your filing. In addition, you know, the rules are there. So if you really want to know what's happening, you can look at that and you can see it. Now, if you run it and you have a condition where you say, oh, we've got this exception because of X, Y, and Z, then you can run that too. You can, if you go to condition X, Y, and Z, then call us, and then we can adjust the rule and make it better so that it doesn't cause a problem in the future. Or alternatively, if there is an issue, we can walk you through what the issue is.
Okay, and the last question that we have time for is the pension analyzer also included in the U.S. Consistency Suite? And if we run that, are we covered? And the answer to that is yes, it is included.
Yeah, it's the same base set of rules, and we've just taken a subset of the rules out of the XBRL US Consistency Suite. So I think that's all we have time for, Michelle. So I'll hand it back over to you.
Great, Campbell. Thanks very much. We just have a couple of other points that we wanted to make. I want to thank everybody for joining us today. I just want to tell you about a few educational events and programs that may be of interest. As I mentioned, because of the question, the pension analyzer and the rules in the pension analyzer are available through the XBRL Consistency Suite, which is a tool to identify and help resolve data quality errors. We're doing a special promotion for everyone who registered for today's event of $500 off the regular price. And I will send an email out about that tomorrow, along with the link to the replay for this program. I also want to mention the XBRL US National Conference, which is coming up September 15th through 17th, and that's going to be held in Bellevue, Washington. The conference is guaranteed to have hands-on best practice training. XBRL data is being used today by many players, both large and small, investors, analysts, data aggregators, regulators, standard setters as well. We'll have keynotes from Microsoft and Ignition Partners. And we have early registration rates in place right now, which are going to go through mid-July, and you can find out more about it at conference.xbrl.us. And then the last program that I wanted to highlight today is our XBRL US GAP Certificate Program. This is a program that we developed jointly with the AICPA. And it's an online, very intensive CPE credit program. It offers 40+ hours of CPE. And again, we're offering a special discount of 10% off for today's registrants. And that will, that along with the other program is going to expire on July 19th. What you see here is a screenshot just showing the AICPA's, learning module. And you can see, a number of the different programs that are included in this. As I said, there are 40. And those 40 are broken down into fundamentals, covering things like the US GAAP taxonomy, creating an instance document, building the company extension, statements, which covers things like the cash flow, OCI, and balance sheet. And then finally, disclosures. So it covers lots and lots of disclosures, including things like goodwill and intangibles. And that's the example that you see up in front of you here, earnings per share, discontinued operations, and many more. So it's a very comprehensive program. And, we're offering 10% off for a limited time. So I'll be sending an email out about that tomorrow as well. Thanks very much for your time today. We have another free webinar scheduled for tomorrow on analyzing corporate data, and we hope that you'll join us for that session as well. Thank you very much.